welcome. I'm Pallavi Sharma and you're watching BIZWORLD Weekly, a show that explains some of the top stories of the week that matter, from markets to economics to trends. We bring you all that you missed out during the week. Let's begin with the market check now. It was a volatile week. All day Sensex extended losses for the 8th consecutive day. Sensex ended 75,939.21 points and Nifty went down to 22,929.25 points on February 14th. It was the color red on all indices on Valentine's Day. From Nifty Bank to broader markets, Nifty Mid Cap 100 and Small Cap 100 all fell down between 0.5 to 3.55%. On Sensex, top losers were Adani Ports, Ultratech Cement, Sun Pharma, NTPC and IndusInd Bank, and gainers were Tata Steel, Kotak Mahindra Bank, M&M, L&T, Axis Bank and Tech Mahindra. On rupee front, it was the biggest weekly rise against the dollar in 7 months after RBI intervened heavily in the forex market. It ended 86.82 against the dollar. For the week, rupee rose 0.7%. On February 14, gold prices experienced a modest increase. Cost of 24-karat gold in India is 8,723.3 rupees per gram, an increase of 400 rupees. The AMFI data came out this week and it had a shocking number. SIPs or systematic investment plan inflows remained robust in January 2025, staying above 26,000 crore mark for the second consecutive month. Contributions came in at 26,400 crore rupees, just slightly lower than 26,459 crore recorded in December 2024. Now, why is this important? It is important because January month has been very critical for investors, where most portfolios were in red. If people are still investing in the market or having hopes still, it is a good sign amid market fluctuations. This means that the retail investor is still positive on the India story, because right now, when the FIIs are pulling out, retail investors are the ones who are driving the market. However, the overall equity inflows dropped to 39,669.9 crore rupees in the January month. The hope is not lost yet though. Experts say that investors have become more mature and they are viewing corrections as buying opportunities and not a reason to exit. For those who don't know, SIPs or systematic investment plans are plans that let you choose a fund, be it debt, equity or hybrid, according to your risk profile, and you can start investing every month, week or quarter, and the amount can be as low as 500 rupees. It will automatically be deducted from your account as per your SIP tenure. In more market news, first the king of charts, now the she-wolf of the stock market. SEBI has banned Asmita Patel, also known as Options Queen, from the capital market. The YouTuber and influencer claims to have mentored over 1 lakh students or investors worldwide. SEBI, through an interim order, prohibited 6 entities, including the influencer's firm, Asmita Patel, Global School of Trading, Jitesh Jethalal Patel, King Traders, Gemini Enterprises, United Enterprises and Asmita Patel from the capital's market. Why the ban? It was for allegedly providing unregistered investment advice to people. They were directed to disgorge over 53 crore rupees collected as fees from the course participants for various courses. SEBI says that the students or investors were misled by exaggerated promises of profits and were forced to pay high fees for minimal trading knowledge. As per complainants, Patel has assets of around 140 crore rupees from her businesses. She apparently gave stock tips and attracted more participants, having over 526,000 subscribers on YouTube, 73,000 followers on Facebook and 90,000 followers on Instagram. She offered the courses on her website, including Options Multiplier, Masters in Price Action Trading and Let's Make India Trade. SEBI's investigation has revealed that Patel's school was making buy and sell recommendations to followers, violating regulations of recently issued notice to all influencers where using live share price was prohibited for so-called educational purposes. The recommendation was reportedly given through Telegram channels. This is not the first time SEBI has taken action against influencers like her, and rightly so. If you have been earning your hard-earned money and you've been investing following advice from who you called a trusted source, and when you make losses, who is to blame? So what you should do as a smart investor is invest if you know and understand the market. If you don't take advice from these registered financial advisors and not influencers who are probably doing this just for views and money. Beware, because only you lose in this trade. They anyway are making money by earning from the courses. Speaking of influencers and YouTubers, India is leading in one space, and that is content creation. You probably have seen these memes. If only I would have made reels during COVID instead of just doing anything, I would have been a millionaire now. Well, it might not be all wrong, because the list of the richest YouTubers is out and you will be shocked just by knowing how much these people earn. Gaurav Chaudhary is the first, also known as Technical Guruji. Creating content around technology, has over 6.1 million subscribers on Instagram and 23.7 million on YouTube, with a net worth of 356 crore rupees. Bhuvan Bam aka BB Ki Wines has a net profit of 122 crore. Amit Bandana, a popular YouTuber who posts funny and relatable videos, has a net worth of 80 crore rupees. Ajay Nagar, or Carrie Minati, famous for again funny videos and gaming content, has a net worth of 50 crore rupees. Nisha Madhulika, popular for her vegetarian recipes, has a net worth of 43 crore rupees. These were just a few. The content creator economy itself is booming in India as per a report. YouTube has paid over $70 billion to Indian creators in the last 3 years. Around 83% Gen Zs call themselves creators. Reports say that India has between 2.5 to 3.5 million creators, but only 1.5 lakh monetized. The creator economy is expected to reach $2.8 to $3.5 billion by 2030 as per some estimates. And politicians are also exploring this space. We all know who leads this front, very own Prime Minister Narendra Modi. Talking about Modi, this week he traveled to two places, France and the US. Both visits were significant for shaping India's economy, one on the AI front and the other on what he says another AI front, which is America-India ties. First, let's talk about the AI summit in France. Key takeaways from the 3-day visit were as follows. First, India and France unveiled the official logo for the upcoming initiative India-France Year of Innovation 2026, signing the commitment to enhancing AI development. A letter of intent was also signed between India's Department of Science and Technology and France's INRIA to establish a dedicated center for digital sciences. Third, an agreement was signed to host 10 Indian startups at the French startup incubator. There was also a lot done on the nuclear energy front. We also saw the governments focusing on nuclear energy in the budget. A declaration of intent was signed to enhance collaboration on next-gen nuclear reactor technologies. The nuclear energy partnership was also renewed between India's DAE and France's CEA, and new implementing agreement was also signed to foster collaboration between India's Global Center for Nuclear Energy Partnership and France's Institute for Nuclear Science and Technology. PM Modi and French officials jointly inaugurated India's new consulate too. Now coming to Modi's visit to the US, meeting President Donald Trump, other officials and big tech CEOs. PM Modi met the US President in the White House. Both leaders engaged in discussions on trade, security and international relations. Following the bilateral meeting, Trump announced that India has agreed to import oil and gas from the US to reduce the trade imbalance between the two countries. Trump also revealed that more big deals will be announced in very near future as Modi introduced the idea of making India great again, inspired by Trump's Making America Great Again policy. Both leaders announced their commitment to fully realize the US-India 123 civil nuclear agreement and will move forward with plans on working together to build US-designed nuclear reactors in India through large-scale localization and possible technology transfer. Defense was also a key talk point between the two leaders. Trump announced significant expansion of military ties with India, including sale of F-35 stealth fighter jets. Also, one major development was Trump's approval of extradition of Tahabur Rana, who was accused in the 26/11 Mumbai terror attack. On immigration, PM Modi affirmed that India will take back any of its nationals residing illegally in the US. He stressed on the effort to dismantle human trafficking networks too. Both leaders also set a trade target of $500 billion by 2030 from current $129 billion in 2024. Trump also unveiled what he calls the biggest trade routes in all of history, connecting India, Israel, Italy and the US through roads, railways and undersea cables. Trump also emphasized that it is very hard to trade with India because of the barriers and high tariffs. He also introduced reciprocal tariffs on US trading partners, and it is expected to affect India a lot because say if India is charging 70% tariffs from US on EVs, then the US will do the same, which can hurt India in many ways. PM Modi and Elon Musk also met, and his family also met Modi. They discussed about space exploration, mobility and innovation. They also discussed about minimum government, maximum governance. Trump's plan to hike tariffs on steel and aluminium imports to a flat 25% without exceptions and exemptions has induced fear in the market. Trump signed proclamations raising the US tariff on aluminium to 25% from 10% earlier. No exceptions, which means that the rate will be same for millions of tons of steel and aluminium imports from Canada, Brazil, Mexico, South Korea and other countries entering the US duty-free. Indian exporters are concerned too. As per experts, the hike will reduce exports to the US by 35% from India, creating a massive surplus that will likely flood into India. US is importing a lot of steel, especially since 2018. Its steel imports increased to $33 billion in 2024 from $31.1 billion in 2018. About half of steel imports for domestic consumptions are from top three suppliers, Canada, Brazil and Mexico. Between March 2024 and Jan 2025, Canada supplied 22% of the total steel imported into US, followed by Brazil at 15% and Mexico at 12%. So these countries will be affected massively. For aluminium top suppliers, Canada providing nearly 40% of the US imports between March 2024 to Jan 2025, followed by UAE and China. India is the 7th largest exporter of aluminium to the US. So looks like Canada is more to lose in this trade war. This is not new. In 2018, Trump imposed 25% tariffs on steel and 10% on aluminium. The idea was to reduce reliance on foreign steel and boost domestic production. But eventually, increased US production in the country led to steel in the domestic market being too much. In 2019, the prices of steel came down to 40%, which affected the trading partners as well. So in his first term, there is one difference, that the trading partners, Mexico, Canada and others were exempted from the tariffs. And the London Stock Exchange Group has estimated that this will potentially raise cost for manufacturers as they turn to domestic producers for steel and aluminium, and that will mean that increased prices would be affecting them. Cost also will be increased on industries like auto and housing in the US. The new tax bill was tabled in the Parliament on February 13. As per the bill, there will be 536 sections and 23 chapters running into 622 pages. The bill, once enacted, will replace the 6-decade-old Income Tax Act, which became bulkier and complex with amendments over the years. Experts feel that the move will simplify the tax laws. The proposed new bill replaces the term previous year to tax year, and the concept of assessment year has been removed. As of now, the income earned in the previous year, that is FY24 for this year, tax is paid in the assessment year, that is now. Now this concept has been removed to simplify the act. So now the tax year will be the period beginning with the date of setting up of the business or profession. In case of new source of income coming into existence in the middle of the year, the tax year will begin from that date, and the tax year will end when the financial year ends, which is a big win for the businesses too. The bill also proposes to count virtual digital assets uncovered during searches as undisclosed income. The bill will redefine the criteria of tax residency, impacting NRIs significantly, especially those who earn more than 15 lakh rupees in India while not paying taxes. So such people will be classified as residents for tax purposes. So then they will be taxed on the income earned in India. As per the proposed law, clearer tax treatment on stock options or ESOPs has been introduced in the law, reducing the tax disputes, and has judicial pronouncements of last 60 years for more clarity. The CBDT can name tax administration rules, introduce compliance measures, and enforce digital tax monitoring systems without requiring frequent legislative amendments as per the clause 533. All TDS related sections have been brought together under a single clause with simple table to make it very clear and understandable. For pensioners, pension computation under civil, defense and other government services will now be fully deductible. As per experts, the bill is set to reduce 50% of the current provisions, marks a significant step towards simplifying tax laws. The bill may come into effect from April 1, 2026 is what experts are saying. Elon Musk's Doge is the talk of the town, a temporary department that has already cracked into closely guarded US government networks, pushed tens and thousands of federal workers to leave their jobs. And this looks just like a trailer because the US President Donald Trump recently signed a new executive order that makes Doge even more powerful. He said there is a need to root out waste and bloat. The order grants Doge broad power over agency hiring. Musk promised to hunt down fraud without offering proof in the same meeting. A special government employee, who is also the world's richest person, leading a government department which barged inside dozens of federal agencies that oversee everything. And Trump says Doge will make its way to Pentagon. Doge staff is unelected, unknown, and it's a mystery on how they will react or interact with the cabinet officials selected by the president himself. Most of the staff is linked to Musk's businesses. Many are young interns with limited experience. The White House has pointed to what it called several cost savings already found by Doge, including cancelling $101 million in contracts at Department of Education, $182 million in Department of Health and Human Services contracts, and $168,000 for an Anthony Fauci exhibit in NIH, and cancelling several other contracts of buildings, saving $44.6 million. The department has been targeted by people, especially because it has been giving access to personal data and federal systems data, which can be misused. On top of this, they have lawsuits filed against Doge. First one coming within minutes of Trump's swearing in, alleging that the department is illegal. Hence the special government employee tag. Recently, a suit was filed by unions representing employees at USAID as Musk railed against the agency and called it a criminal organization. The administration plans to reduce its staff from 13,000 now to 300. Unions representing treasury workers also filed a suit leading to an order limiting to what kind of access Doge employees can have to highly sensitive systems. These were a few. Musk's leads some of the biggest businesses. His influence is huge. A social media giant, a satellite broadband company, a car maker, space exploration agency, an artificial intelligence company, a real estate firm, and a neurotech company. He has access to so much data and power, and now he turns into a government employee. Do you think so much power should be given to one man? Let us know in the comments. Work from home or work from office? What would you prefer? Andhra Pradesh CM is promoting work from home. Chandrababu Naidu announced a significant move to expand work from home opportunities in his state, which focuses particularly on empowering women. He said, and I quote, "Work from home gained prominence as a flexible and scalable option. Concepts like remote work, co-working spaces, and neighborhood workspaces provide new avenues for businesses and employees alike to create productive and flexible work environments." On the other hand, L&T chairman, yes, the same guy who said, "How long will you stare at your wife?" and said that employees should be made to work on Sundays. He also said now that he finds it funny that Indians don't want to work from office or relocate for jobs. He said, and I quote, "If you tell an IT employee to come to office and work, he says bye. And that's a different world altogether. Therefore, it's a funny world which we are trying to live in, and many of us wearing slightly more white hair are trying to understand it. It is never-ending debate though. Work from home or work from office. The work culture is changing with more terms like quiet quitting, ghosting coming into light. As per a survey by Flex Jobs, 84% millennials and 74% Gen Zs want to work from home. They say it will enhance their productivity too. Well, some could say that it is better than being stuck in traffic for 2 hours and being late to work. Bangaloreans might relate, but what is your opinion on this? Tell us in the comments. If you live in America, you open Google Maps, check the Gulf of Mexico. It is no longer there because it is Gulf of America for you. You see, Trump is trying to expand the US. First, he said he wants to buy Greenland. Now he says he wants to change the name of Gulf of Mexico, and he has done it now, but just for the Americans. The president has unilaterally moved to rename the Gulf of Mexico. It is still in process to be enforced within the US. Apple Maps and Google Maps have implemented the change on their platforms, and the US Board on Geographic Names has been directed to update Geographic Names Information System accordingly. For users of Apple and Google Maps worldwide, it is still Gulf of Mexico, though the name change has been implemented only in the United States of America. Now, this was done without the consent of Mexico or Cuba that border the Gulf. As a result, several legal and geographical issues may arise as a result of this, because Trump cannot rename any part of the world without a formal international agreement or protocol that specially deals with naming the maritime areas. If this is to be done worldwide, coordination would be required from all relevant countries and international bodies like the UNGEGN or the IHO. So basically, it is just for America right now. Even private companies are not bound to change the names solely on the basis of an executive order issued by Trump. However, Google says that it is a long-standing practice of applying name changes when they have been updated in official government sources. So now Gulf of Mexico joins the list of water bodies that are under dispute for an official name, like Persian Gulf, Sea of Japan, which South Korea wants to be named as East Sea, the South China Sea, which Philippines wants to change, your English Channel, which is being in dispute between France and the UK. But why? Well, some experts say that it is just a move to show power, as his order is titled Restoring Names That Honor American Greatness. But it looks like the Mexicans and Cubans don't think it is a great idea, as social media is now flooded with mixed views. What do you think on this? Let us know in the comments. Dark comedy, free speech is okay, but what extent can get you in trouble? Well, Ranveer Allahbadia is in trouble for an obscene comment about parents and sex he made while judging Samir Raina's show India's Got Latent. One comment can put you in trouble and can deplete your brand image so bad that he has lost 50,000 followers after the comment went viral. For those who don't know, Ranveer Allahbadia, also known as Beer Biceps on Instagram and YouTube, has podcasts with politicians, entrepreneurs, actors, talking about their life and career. Basically, he is a well-known content creator with around 3.4 million followers on Instagram and 8.21 million subscribers on YouTube. As per experts, this one comment can have a significant impact on his brand value, and brands may not want to associate with him now. Politicians, actors have commented on the controversy, saying an appropriate action should be taken. Singer Viprak, in a social media post, said he declined an offer to attend his podcast too. Allahbadia has, however, apologized for his comment and said that comedy is not his forte. Others who were on the show, Apurva Makhija, Ashish Chanchlani and Samir Raina, the host of the show, have been sued too. Samir Raina has already deleted all the episodes of his show, saying that everything that happened is too much for him to handle, and he has also cancelled some of his shows. All influencers have been asked to appear for questioning with the Mumbai police after the FIR. An unscripted show on a public platform on dark comedy, he definitely should have been careful with his words. That's all for the show today. Hope you like what we have put together for you. Let us know in the comments where you want us to improve, and we are very, very open to feedback. This is Pallavi Sharma signing off for ET Now.